Good evening, I'm Giuseppe Basile, I'm the Essentially. You can find the website www.fibstalker.com. I also post regularly on Twitter using the @fibstalker nickname. Good evening, today is Friday the 26th. This video is for Thursday the 25th, but it's actually almost 2 a.m. in the morning, and I'm going to provide midweek update for all the markets I follow. It's going to be very quick, it's very late, and I've been busy with my coaching program. If you are interested, give a look at my newsletter and shoot me an email. Just reply to my email and I'll provide you additional information. Let's start from the euro dollar. You remember that on September the 16th I was at the Dale Pinkert's room, and you can review that video I provided. Actually, this short setup, I mentioned the 129.85 level that starts an area of resistance, and I provided the stop 130.15, 130.16. Actually, when I was in the during the interview, the market was still the price was still a little bit lower here. You can review the market, and eventually tested this area and started moving into the first target 129, 128, and second target 127. As you can see, today on Thursday the market touched that level. What you see here is the new bar, Friday bar, which is forming, and there was a reaction. So the market now is actually telling us price discovery, which is enabled by the method, is actually telling us now is providing us a new area of resistance, and this area will actually make it or break this market. If we break above 127.98, 99 here, we have the possibility for a move higher in this market, and that would be an indication that program trading, the sequence of measured move on program trading, and we had a jumping anchor here, is now filled, and that is happening on top of an important within an important area of support. So it's still possible for this market to bounce out of here. Will it do it? We have a clear level here, and we have to look at that level. The level is 129.27.99. Moving to the SP500. The SP500, I modeled this market with this area 183.83, sorry, 118.83, and I mentioned this area during these highs, and after we have these higher highs, I indicated that level. It played nicely, but that level is also an area of support, of an extension long, and we can see this extension long actually it was capable of modeling this price, and actually price just stopped at this 1883 level, 1882.75. In fact, I believe the low is, no, it's lower, 82.25. So as you can see, from a formal point of view, this would be a violation, but still the market was pushed higher, and the reaction of the market came at this 2014. Now this is an extension, so there is still a possibility for this market to just continue higher into that 2073. And if we use the other measure move, the traditional measure move here, you can see that the first target was never reached. That was the target I was looking at, and the second target would be above that 2073. So at the moment, for this market, what is possible is a potential reaction right into this all the way halfway back 1948. I've also indicated this as a potential level of support here, and there is a possibility for this market to get to this area, and again we could see again participation in that area. If that's not the case, there is another level that we have to watch, considering the next extension long, and that would be from these highs to new highs. So there are two areas here we have to watch for the SP 500. One would be the 1848 with a stop below 1932.75.50. If we break that level, the next level we have to watch is the 1918, and that's what we are going to look at if we break below that level. I don't think the bull market in the SP 500 is completed. At the moment, the SP 500 is actually trading a measure move short, as we can see here, and the market went into this level, and you could use the fib stalking technique here to time this retracement to the 50% back here. So you don't have to question or guess any time. When the sequence of measure move higher in this move on the daily fails, then that's the entry signal for the short here. A quick look to the dollar index. The dollar index, despite it broken the next extension long here, it actually continued into the first target and then eventually the second target. So this market is still strong, and I'm going to model the next measure move as an extension from previous highs to new highs, and if this move higher continues, we should see this market hovering above this 85 level here. So if we don't if we decisively move below 85 level here, there's a possibility that the correction in this market would finally start, and before or after we will have a correction, and it could be as severe as bringing price back into this 83.45. So we will wait for that, and you can always trade the euro dollar. You don't have to trade this market. The euro dollar is much more dependable because of the higher volume. Gold E-mini, you will remember that last 2 weeks ago I've indicated this measure move here. It was a measure move short from previous lows to lows. It played into the first target, and then there was the next measure move, which is actually confirming that this anchor it's what the program trading is using at the moment. And as you can see, when price went into this anchor again, into this area of resistance, there was actually a reaction in the area. So this again could be timed for a freelist trade using the fib stalking technique. Price as a target, that target is at 11.95. If the price moves lower, that's the level where we're going to see this market. But there is also a possibility for this market to pierce the 12.39 on the upside, so we don't know that, and we will need to wait. If that happens, remember that we are on top of a very large support area for the gold, the mini future here, so there's a possibility for a continuation higher. Next will be the US dollar versus Japanese yen. This market has been respected the setup I've been looking at basically in the last year. You will remember that I've indicated this lows to highs here as an extension, and we also have on the weekly time frame the 94 long. So on August the 1st I published an article requested by fxtrade.com. You can go, it's a fundamental analysis of the Japanese economy, and I speak about the currency as well. You can go on fxtrade.com and look for Japanese economy, and you will see that I gave two targets. The first one was 108 area, and the second one is 115. So the first one has been touched in just less than 50 days here. And on Sunday in the weekly review, by the way, if you want to receive the weekly review, just subscribe my newsletter, and and you'll get it. On Friday, actually, on Sunday, actually, I provided this measure move, measure move long. So on Tuesday, as you can see here, this measure move long was tested, and this could be timed using the fib stalking technique again. And we know now that this market has targets above. This is the first target is going to come at 109, 1010 basically. And the second target 110.70, 110.80. So this extension long is helping price into that further target at 115, and it's possible definitely for this market to make it. Now, if the US dollar corrects, we're going to get a deeper correction, and this deeper correction is going to come from is not going to be that deep in this market, because has the potential to bring price just back into this 107.45. Very strong measure move higher. Program trading long is in control in extensions, and now this market can just continue high. So if you timed it here, congratulations, and that's the signal I gave on Sunday, and you are well into potential 109.90 and 110.70. Moving to the euro versus Japanese yen, what happened here is that area of potential continuation high and extension did not hold, which means that this market is actually already retraces into the all the way halfway back. So now it's key to study the sequence of measure move lower of this 6-day lower, and as soon as the sequence of measure move fails, and let me see if I can show you this on the 4-hour charts here. There is a first measure move short here, and as you can see, this measure move brought price into first target, but it was not able to bring price into the second target. So we have on the other side, we have participation on the long, as you can see here, in the 138.50 area. And now if we want to use the safest level, that would be a break above the 139.53.54. If that happens, this is a confirmed long, and there is the possibility to get long above this level with a stop below low. If that's too risky, well, this market could just continue. If you consider that too risky, this market could just continue higher, and that could be a lost opportunity. So there are two possibilities. If that happens, we can wait for the market to retrace and then eventually enter. There is also another possibility, and this would be already confirmed, and this would be a very, very aggressive type of entry. And as price went above 138.93, there is the possibility that the trend this trend lower has already failed. Now, I always like to use the largest confirmation. If you are very aggressive and this market corrects again into the 138.25, this market could continue, could actually bounce and continue higher. So on a smaller time frame, this support was confirmed. If you use a very aggressive setup, but I always like to use the normal setup. So no, I will not get involved long in this market until I see this 139.53 being broken on the upside. Moving to the pound versus Japanese yen, the daily chart. Let's look at the daily chart here, and the daily chart is also likewise the US versus Japanese yen is actually respecting this extension long. You will remember that, and you can go back and look at the video I distributed to my newsletter subscriber on Sunday, and you'll see that I traced this measure move, indicating this area of support 177.33, with a stop below 176.53. That stop was never hit, and as soon as the sequence of measure move lower here failed within this area, there was a confirmation for long. So this offered a free risk trade, and the market is coming back to this level now and could just continue higher. If continues lower, then will be stopped out with a break even with a break even trade, and there will be then the possibility for the market to retrace all the way into this 175.03. So this corresponds to previous high here, but it's not the reason why that there might be participation if we get there. But this is not yet confirmed, so the trade has a stop below these lows, and there is still 50% of it, and this market could just continue higher. Okay, the euro versus the Canadian dollar. You will remember that a few weeks ago, I mentioned this violation here 3 weeks ago now. From lows to lows, the market went above this 142.74, which was for me an indication of the fact that this market could actually reverse here and move all the way into the 147.97. So this market has failed the sequence of measure move lower. So there are two possibilities for this market. Either it reaches the first and second target here into this area of support, which is also my area of target in a review I did for Dugascopy at the end of May. And we don't know that. Unfortunately, there is no way we can tell that. What we know is that the sequence of measure move short here has failed. So price discovery enables us to tell that there's no interest from strong program trading on the daily time frame to keep pushing this price lower. If this price continues lower, is because of activity on the smaller time frames, and that's okay, because this would bring price into an area where now there is a strong participation on the long side, and we already know that there is a weak participation on the short side because of the violation of this sequence. So if the market moves again 42.74 again, that could be an indication that it's ready to continue higher and might just move higher from here. There may be a correlation between the euro Canadian dollar versus the euro US dollar, and well, we don't know that. According to the euro Canadian dollar, this market is ready to move higher. However, I don't just trust a simple consideration like this. I want to see each market as its own story. This market has failed the sequence of measure move lower. So I expect a continuation higher before or after we test this level here. Unfortunately, the method is not able to tell this at the moment. Moving to the pound versus the US dollar here, pound versus US dollar. Let me remove this. This is an old presentation. So we had this move higher that actually broke the sequence of measure move lower. The situation is really very similar to the euro versus Canadian dollar, because this market actually put up this move higher, and this could be driven by the vote in Scotland rather than actually a strong participation from program trading, because this 160 was never tested. The 160.50 was actually touched. If we look at the daily at the month, we are still hovering around this level. There was this move lower. The sequence of measure move failed, gave us a free risk trade, and then continued lower and stopped us out, break even. And now we have the sequence of measure move lower, and actually testing this level of support to 168.77. I never guess, and I don't guess in the market. Just leave the market decide. um, I think this market can actually continue lower, but that's what I think. It's not what the market is going to do. If the sequence of measure move fails here on top of this area of support, that's a valid entry, and we need to get that entry, which could be pressed into 166.36 and eventually 168.17 even. There is resistance on the other side on the bigger time frame, and that comes right at that first target here. So if the market goes there, there's a possibility for a reaction lower from those levels. There is participation, there is potential participation from program trading there. It would be a nice trade from the level into the larger area of support, but we don't know that. And as I said, that's just an idea. The market will tell us what to do. Moving to the Australian dollar versus US dollar, this market is continuing lower, no hope here. You remember I gave this trace a few days back. Actually, I was still on holiday, so I gave that trace after the fact, but brought price into first and second target, and now we had the new measure move trading actually on Wednesday here, and this has already brought price. There was a reaction at this next measure move 089.08, and there was participation on the downside into one first target 087.92 and second target 087.32. So that's the next target, and if the market keep moving lower here, is the possibility to get into this second target again and then continue the sequence of measure move lower. So you will remember that I mentioned that this market was all when he failed the sequence of measure move higher here, he was doomed because there was no more participation of program trading on the upside, and I mentioned that we could get at least into this 090.82. The market has been extremely weak here, but even if you exited at this level, then as you can see, if you exited at this 090 by applying the rules, you could have actually identified the next measure move here and just enter a little bit higher than that level. So the fact that you exited this potential area of support, it's okay, because the market can actually bounce. You never know how the market can bounce with a very strong pace move like this one. So that's the reason why I take profit out here, and when I have bigger support levels, I'll act on that. US dollar versus Canadian dollar, you remember that we have a 11250. It's an area of resistance. I like this move higher. I think there is an ordered support from program trading that was supported this 108.08, which progressed into first target, but then we saw the next measure move failed, and to me that's an indication that program trading is actually not supporting this price. So there's a possibility that when price gets into this 116, we could see a strong selling here, because now there won't be any program trading supporting this price. So the smaller time frames might drive a sell off here all the way into the 108, 109 basically, and that's especially if the US dollar corrects, and before or after the US dollar will correct. So don't trust this move higher. Good if you are into it. I would take profit at this 111.60. And finally, New Zealand versus US dollar is extremely weak here with this measure move that I mentioned 2 weeks ago, progressing to first target, and the next measure move actually also worked in this market, showing that this market is actually trading in extension here. So sorry, I say something stupid here because the second one did not indeed trade. So which means that this market is actually hitting first and second target very extremely weak here, and there are different ways we can actually model price, but the best one is this 08218 here, which brings price into first and well below the second target. So which means that when and if this market will retrace, a potential areas of resistance is going to be this next measured move at 080 basically. So that's where the next short setup would be. This market, will continue lower. I mentioned that because the next support is now in the weekly time frame, strong support 067 077 here, and that's we're seeing where we are going to see this market. And after that, if we get a bounce, that bounce is going to be quite relevant one, but it's not going to bring price much higher here. We'll probably see if that bounce happens, market move into this 08051. This is it for today. Thanks a lot for your attention. Thank you very much for subscribing and following my newsletter, and congratulations to those who took the trades. I've actually indicated a trade on the euro dollar that actually provided the day I was interviewed by Dale Pinkert on the LAR, and that was a good entry, which could be timed using the Phipps Talking timing technique. So this is it for today. Thanks a lot. If you are interested to my coaching program, I'm going to start it on October the 4th. I'm going to provide detailed information on the way I look at the markets, the way I identify the trading plan, and also at the Phipps Talking technique, which is a way to exploit program trading on the smaller time frame to time this area of support and resistance, like the one that the resistance area that I've indicated on September the 12th. So this is it, and have a good evening and great trading day tomorrow. Tomorrow is Friday, so no need to be involved. Algorithmic trading winding down, funds taking profits, hedge funds taking profits on the position on the week, so don't need to be involved there. Thank you very much and have a great evening. Bye bye now. Shoot me any reply email if you want to get more information on the analysis or on the coaching program. Bye bye now.